Star Daily with Phil C.
We came back down, we pushed towards the upside, right? And then we came all the way down into the 886 right here. Now what you're looking at in front of you is the euro-dollar pair. Euro-dollar pair on the 1 hour time frame here. And what you can see from this impulse leg, I've got my stops below this low right here. Because if price action does push down lower, I want to get out of this position. Because if price action does push down lower, stopping us out here, we may get a retracement and then a press down lower into our next structure looking left. Right here. Yeah, that's why my stops are there. If I'm wrong on this trade, that's where I want to get out. The stop placement indicates that I'm wrong initially on this trade. Okay. And this is a bat pattern I got involved in. What I'm looking for is a retracement, a press up into the 382 for target 1, and then the 618 for target 2. So that's the first trade that I'm currently involved in. I did get stopped out of a couple of trades. I think yesterday we were looking at a trade and it didn't quite, we didn't even get the opportunity to be involved. Because as I mentioned, price action can press down lower, which it did. And we'll get to that in a moment. Today is a interesting day. Because us being human and us having emotions, I have been stopped out of a couple of trades. So when you come into the marketplace and then price action moves and gives you opportunities that meet your criteria, where price action is saying, hey, you need to take this trade, you need to buy the market right now, you need to sell the market right now because your criteria is hit. When those opportunities present themselves after a string of losses, because we're human and we're emotional, we tend to have second thoughts. The point of me sharing this, is that will never ever go away. You can be a professional trader trading for a very long time, but that emotion, we can't get rid of it. All we can do is manage it, right? So that does happen to everyone. You can't escape that. You can't escape that feeling at all. So I came in and I've got some opportunities and you don't really feel like getting involved, especially after being smacked around from the markets. Because when you have a string of losses, the tendency is to just back away a little bit, just to step back, take a bit of a break. But to remain successful, right? To stay a consistent, profitable trader, we have to come in and trade the plan no matter what. You have to do it. No ifs, no buts, no ands, none of that. We have to come in, identify the trading opportunities, and get involved. Because we have to stick to the plan. We have to trade the plan. That's it. You have no choice. So with that, we're getting involved in the next opportunities. One of them being the euro-dollar right now. Bought this here. Quickly navigate over to the Aussie yen 1 hour time frame. We had a deep Gartley pattern from yesterday. As mentioned, if we get a move towards the upside here into our D point completion, we can sell the market with a really good risk to reward. I was looking forward to this opportunity. I was looking forward to this trade, but now I'm not going to get it. And what ends up happening here, this is no longer valid now, by the way, because we pressed down lower, okay? And what did I mention yesterday? And this comes with understanding price action. This comes with understanding the language of the markets. If we take a look at the ebbs and flows right here, We can get rid of all this because we don't need it right now anymore. We can take a look at the ebbs and flows of the market here. We came down, we closed below this low, okay? And what did I say? What did I share with you? If that happens, if we get a lower low, lower close, most likely price action will press up, back up into where? This structure level right here. And then we may get a further move to the downside. And look what happens. We get a further move to the downside. This is understanding the language of the markets. And you can do this too. It's called Star Classroom. I have videos on this. All you need to do is locate the link below, sign up for free, get involved, and you can do this too. Reading the markets, reading price action. Because now what happens? We get a lower low, lower close right here. So what's most likely to happen here? If we get a lower low, lower close, excuse me. If we get a lower low, lower close, what is most likely to happen? Price action moves up into, look left, this little structure level right here, and then most likely retests the lows or potentially further. That's what we're looking at. This, when I first looked at this, this looked like a wonderful counter trend trade. Because we had, what's this? Just get rid of this. Because we had a nice equal level move, didn't we? We had a move down, and then we get a move back up here. Like this. And then if we copy and paste this, right? We duplicate this move, and then we drag it down. You can see right here that we get a nice equal level move right here. And this is one of the criteria of setting up a counter trend trade, right? We come down, equal level move, and then not only that, we are oversold on the RSI. And then price action moves up. And then we move all the way back down, retesting this low right here. So now we have a perfect V-shaped double bottom. This right here is a valid double bottom. And then we look at the RSI. We get RSI divergence. So this is almost a textbook counter trend trade opportunity right here. Almost. I'll explain why in a moment. So we have an equal level move. We put in a double bottom right here. We have excuse me, RSI divergence, right? So this is looking perfect. Looking like a good trade. Fibonacci extension. Swing high to low, back up in. We are resting at a 1414, so we have a Fibonacci extension, AB equals CD, double bottom, RSI divergence. This is looking like a really good trade opportunity. So if we're using our combined technical scoring system, we can almost enter this trade as a counter trend trade. The only problem is, and I'm happy that the price action has come down and created pressing down lower, potentially creating new lows here, is the reason why that this is happening, back to language in the markets, right, reading the ebbs and flows, is we don't have a really good level of structure here, right? That's the only thing that's missing right now. If we drop in a line tool at the 1414, and then we scroll out, squash this up, scroll out, we only have this little point right here. Not much at all. We only have this little point right there. So if we scroll out a little bit further, might have to go out to a higher time frame. Let's try the 4 hour. Scroll, scroll, scroll. Yeah, look at this, look at this, look at this. Very, very important here. So right here is a perfect counter trend trade opportunity. However, one of the criterias that I must have with a counter trend trade opportunity in my rules is a level of structure. We only have a little test right here. But if we look left, look at where structure is. Right here, right here, right here, right here. Okay? So we have to drag our line tool all the way down to the next level of structure. Why? This is where price action is most likely to go to. Structure acts like a magnet. At these structure levels, it tends to pull price action towards that level of structure. You'll find that when you study structure and price action, that tends to happen over and over and over again. And what is structure? It means a level where price action is most likely to react to. So if we currently rest right here with price action, then we're not most likely to react here. Sure, we can, anything can happen. Yes, I understand that. But we're looking to trade with probabilities in our favor. And one of them is a level of structure. That's what we need because we want to be in high probability trading opportunities, right? So if we look back in the past here, price action is most likely to react from that level. So what we would need in this trade is this kind of structure looking left, because then we have a high probability of price action reacting in our favor at that level. Yes, it can blast and push us down and things like that, but the main takeaway, the point here is you want probabilities that are high in your favor, especially when you're making a strategy and having an edge in the markets. So structure plays a very important role with price action. That's the only thing, jump down to the 1 hour time frame, that was the only thing missing from this counter trend trade opportunity. Other than that, this was a textbook example of a counter trend trade. But because we have structure all the way down here, look at what price action is doing right now. We're pressing down lower. I'm expecting, now I can't read the future here, just going off a basic skill set that I've developed over a long period of time becoming a professional trader. But I predict that price action is going to come all the way up, retesting these highs right here, and then potentially moving all the way down here. That's all. We can just drop right there, right down to the 85,900s or 86 even handle number, right? We could just straight away drop there, or we can have a pullback and then continue lower. Because of that added filter, we saved ourselves a potential losing trade, right? Because we had that filter in place, which allowed us better probabilities for this trade. No level of structure, can't get involved, and this is why. I wasn't planning on doing a video about this, but that's just a perfect example, and I think that it's incredibly valuable to share that. It's worth a share, is what I'm saying. Also, right, quickly jumping over to the Kiwi dollar 1 hour time frame. Just make sure everything is good here. Lots of lines and everything on this chart, right? This is a bat pattern right here. We have our X to A to B, B to C, C to D. So we came all the way down, completing our D point right here at the 886. We got involved. We buy the market. Do we want to? Remember what I said at the start of the video? Not off a string of losses, no. But the plan is the plan. And we trade the plan no matter what. Price action told us to do this. How? Because it met 3 of our criterias. In other words, rules of engagement. And then we had to buy it up no matter what. Could this be a loss? Probably. Potentially. Could it be a winner? Probably. Potentially. As long as we followed the plan and executed it, we let everything else play out. Let nature take its course, right? The nature of the marketplace. That's what we're doing. We might get a move up towards the 382, potentially 618. That would be great. Really good to finish the week on a win. Or I could just get stopped out completely across the board. Who knows? We'll find out. Now that's on the Kiwi dollar 1 hour time frame. Now remember, you can follow along with me to see how these trades played out, or draw them up yourself on your charting package. I do have a couple of videos going through drawing out the bat pattern, of course, and also the Gartley pattern. Anything else? Jumping back over to the euro dollar 1 hour time frame before I finish this video off. Might get stopped out here. Might get stopped out of this trade. We'll see how it goes. But we have one more week remaining before we get, what is it, March? Before we get March. Before we finish March. Right now, as price action presses down, as it keeps pressing down towards our stop, inevitably, right? As it presses down towards our stop, we need to continue rolling our fibs. The fib retracement from X to full leg of the move, where price action is, from A, excuse me, all the way to full leg of the move, we roll our fibs to keep measuring our targets here. So we keep rolling and adjusting our limit orders like this for 382 or 618. See if we get lucky with this. What is luck? Luck is defined as preparation meets opportunity. And we'll see what happens here. We might get stopped out, or we might go on and hit targets. I have no idea. Right now, as long as we execute the plan and we keep doing that consistently, then I can tell you that over time we are going to be more profitable than we're going to have more wins than losses. And that way we will be profitable, is what I'm trying to say. Okay, other than that, you know what to do. If you're not part of the Star Classroom, hit the link below, get on the platform, talk with me, go through the foundation series and get started with the education videos. And I promise you, you're going to really enjoy that. And maybe it's something that you want to do over the weekend, which would be great. Other than that, until Monday, it's Friday, right? Yeah. Other than that, until Monday, be safe, enjoy life, and I'll talk to you soon. Thanks so much.